everyone, and welcome to today's Crypto Headlines. I'm your host, and I'm here to bring you the latest, most valuable, and fascinating insights from the cryptocurrency market. Today, we'll delve into macroeconomic shifts, the latest investment moves by institutional investors, and cutting-edge innovations in blockchain technology. Each piece of news is crucial for your investment decisions. Let's together gain insights into the market and seize future opportunities. First, let's focus on the macroeconomic outlook. Recent U.S. non-farm payrolls data came in weaker than expected, which could give the Federal Reserve a reason to resume interest rate cuts. However, the crypto market reacted with a fresh wave of sell-offs. Veteran investor Arthur Hayes warned that macro headwinds, including new tariff concerns, could push Bitcoin towards the $100,000 mark. He himself has already de-risked by offloading over $13 million in crypto assets. A report also indicates that the recent pullback was caused by long-term holders taking profits around the $120,000 level, reflecting a cautious market sentiment. Despite the bearish sentiment, some analysts remain optimistic. They argue that with institutional funds entering the market via ETFs, Bitcoin's volatility has significantly decreased, suggesting the traditional 4-year cycle may be over. An Elliott wave theory expert even predicts that the current dip is just a temporary pause before a rally to $140,000 by year-end, though he warns of a potential bear market in 2026. It seems there is a significant division in the market regarding Bitcoin's future direction. Next, a major regulatory update is worth our attention. The U.S. SEC recently raised the options contract limit for Bitcoin ETFs by 10 times. Industry experts believe this is a big win for the market. Analysts point out that this change will give BlackRock's IBIT a significant advantage, further solidifying its leading position. This move could also help suppress Bitcoin's volatility and stimulate more spot demand, forming a positive feedback loop. This is part of a series of SEC approvals that are paving the way for crypto products to integrate with traditional finance. Ethereum has also become a market focal point. On-chain data shows that despite recent market fluctuations, Ethereum's mega whales are quietly accumulating the asset. One address alone bought $300 million worth of ETH through an over-the-counter trade. Meanwhile, inflows into Ethereum spot ETFs are exceptionally strong. ETF holdings have surged by over 40% in the last month, with BlackRock's ETF attracting $1.7 billion in just 10 trading days. This indicates that institutions hold firm confidence in Ethereum's long-term value. Let's see how traditional financial giants are embracing crypto. A Ripple-backed report reveals that from 2020 to 2024, major banks like Citi, Goldman Sachs, and JP Morgan made over 100 investments in the blockchain space. These investments are concentrated in core areas like tokenization, custody, and payments. Analysts believe asset tokenization is the next major trend, with the real-world asset tokenization market projected to exceed $18 trillion by 2033. The deep involvement of traditional finance is pushing crypto technology into mainstream applications. Another major trend in the crypto industry is the surge in IPOs. Recently, several crypto companies have been actively preparing for public listings. Bullish, a crypto exchange operator, filed an IPO plan to raise over $500 million, attracting interest from giants like BlackRock. There are also reports that Kraken is planning an IPO with a target valuation of $15 billion. The blockchain lending firm Figure has also submitted a confidential IPO application. This wave reflects a maturing market under an increasingly clear regulatory environment. MicroStrategy's investment strategy remains bold. The company is once again issuing new debt to raise more capital for Bitcoin purchases. At the same time, an interesting new phenomenon is emerging. Bitcoin is becoming linked to politics, with Donald Trump's media company DGT making a large BTC purchase. This has sparked a debate on whether Bitcoin is shifting from a neutral financial asset to a symbolic, tribal, asset with political or cultural affiliations. In Asia, crypto regulation is also moving forward. The Hong Kong Monetary Authority's stablecoin licensing regime has officially taken effect. While the market saw some short-term volatility, Many experts consider it a healthy correction that will help weed out speculators and attract well-capitalized firms. The new rules, with strict reserve and capital requirements, aim to ensure the stablecoin market's sound development and solidify Hong Kong's status as a global digital asset hub. The Solana ecosystem is making a breakthrough in the hardware space. Solana Mobile has begun shipping its second-generation Seeker phone to over 50 countries. This device features a decentralized app store to bypass traditional app stores' crypto censorship and includes a hardware-level seed vault for top-tier private key security. The phone's pre-orders far exceeded its predecessor, showing strong market demand for crypto-native devices. The memecoin craze is fading fast. Data shows that Pump.Fun, a memecoin launchpad on Solana, saw its monthly revenue in July plummet by 80% from its January peak, marking a new low for the year. Simultaneously, the overall market cap and trading volume for the entire memecoin sector have also seen a significant decline. This indicates that speculative fervor is cooling and the market is returning to rationality. For investors, this means being more cautious when chasing trends. Finally, a security incident serves as another wake-up call. A crypto user who signed a malicious approval transaction 15 months ago had over $900,000 in stablecoins stolen. The attacker patiently waited until a large sum of money was deposited into the account before draining it all at once. This incident reminds us that even old approvals can pose a huge security risk, and it is crucial to regularly check and revoke unnecessary permissions. Here is a fun little anecdote. A statue in Lugano, Switzerland, dedicated to Bitcoin's anonymous creator, Satoshi Nakamoto, has been stolen. The faceless statue was meant to symbolize the idea that we are all Satoshi. The group behind it is offering a 0.1 BTC reward for its return. This incident has once again fueled curiosity about Nakamoto's identity. Although his wallets have never moved, his theoretical holdings of 1.096 million bitcoins would place him among the world's richest individuals. That's all for today's crypto headlines. From macroeconomic shifts to regulatory clarity, from institutional entry to technological innovation, the crypto world continues to evolve in its own unique way. The market is risky, so please invest prudently. Thank you for tuning in, and we'll see you in the next episode.